Day. Good morning, good morning. Man, it is a good morning. It's Friday. Holy smokes. Did you guys see that news? What's up, JW? Big Dog, Ron C. Did you guys see the way the market moves when news hits? Egads and little fishes, my friends. That's why we don't trade into news. Well, that's why I don't trade into news. Because, man, it goes crazy. You almost spilled your popcorn. That's when you know it's good news. Um, Guys, I don't know about you. I sure hope you're having an amazing morning. I am. Um, Crude oil has given me opportunities this morning. NASDAQ gave me some opportunities this morning. And I'll tell you what, I'm done for the day. I refuse to open my NinjaTrader 8 back up because I am gold met. I'm going to go into the weekend happy. So always, always, always a good thing when that happens in the morning. I'll tell you what, pre-market's been good this week. I've had, I think, 3 days this week where I've hit my goals before I ever come hang out with you guys. You can probably hear it in my voice, get all excited. Um, Welcome to the classroom. It's Friday, guys. We survived the week. We've got one more day and then it's off to the weekend. Ron will be on the beach and some of you guys will be digging out of snow. Sorry about that. Good morning, Abdul. Nice to see you. I'm glad you survived to see the day. You know that I was worried about you. Um, Guys, let's start the way we always start. And let me tell you, hey, Haji, how are you? I'm stoked to be here today. Abdul, if you ask my wife, it's annoying how much I remember. That's one of the reasons, to be honest with you, that I'm a pretty effective teacher in this room, I think, is I remember everything that you guys show me. I remember the patterns that you're committing to. I remember the mistakes that you're making, and it makes it easier for me to help you guys. It really does. Um, and if you're married to me, it just annoys the hell out of you because I remember everything. Trust me on this one. Um, Guys, we're going to go through our patterns and we're going to talk about what we do every day. And we're going to talk about, well, first of all, news, right? Forexfactory.com/calendar. Guys, I never miss out on news. This is what I'm doing when my charts are opening, when I'm drinking that first cup of coffee. And let me give you a visual of why. This is the NASDAQ. I love me some NASDAQ. I really do. Good morning, Joel. But I want you to see what the NASDAQ did when news hit at 8:30. Let me push this over to the 8:30 timestamp. Actually, we'll do, that's about it right there. Still going. Guys, that's 8:30. That is absolute chaos. And this all happened really within, well, it started all the way up here. There's your 8:30 timestamp. And it went right off a termination condition and bounced off of a key area, right to a key area. Termination started the move up into resistance, down to support, into resistance, down to support, into resistance, down to support, into resistance. Guys, if you don't think that these fibs are freaking amazing, go take a look at how well they held the market in about 20 seconds worth of action. And that is, oh my gosh, 55 points. And it just bing, bang, boom, right off of these key areas. And it's doing it again. That's one of the lessons that we're going to have today, guys. We're going to talk about the effectiveness of Fibonacci. We're going to talk about the effectiveness of momentum. And we're going to string it all together. But every day I talk about news. I don't care to be in the middle of that crazy emotional rage. So when I see high impact, red box, I see orange, medium impact, guys, I'm on my hands. I'm sitting still. I'm refilling my coffee. I'm making a pancake, whatever. Um, Anything other than jumping in front of that market. And what's fun, and I did it today, is I tried to trade the market mentally. And it was moving so fast, even in my brain, I got run over about 1,000 times. So now I know when they're going to react. I know when the people that move the markets are going to react, so I don't have to be in their way. And that's a huge, huge, huge advantage, I think. So at 10 a.m., write it down. UOM consumer sentiment, guys. It's coming out, and it has the opportunity to make the market bounce. Somebody in this room 5 minutes before will be like, "Hey, news in five. Great time to take a break, stretch your legs." And then what are we going to talk about today, guys? We're going to talk about high probability trend trade. This is your foundation trade. This is the one. Hey guys, I have to make an apology before I get going in this. If you're on demo, good morning, Sydney. Yesterday, I inadvertently said 10-day demo, and I had I had a salesman ask me what the hell was I doing. So if I told you that it's a 10-day demo yesterday, I apologize. This is why I'm not in sales, because I know very little about the sales process or what you guys go through during the sales process, but I'm pretty good at reading indicators. So if I gave you false hope on an extra 3 days, I apologize. Just wanted to throw that out there. Guys, everything that I talk about, every rule that you need to be successful with Nexgen is available to you in the tutorial section right off the education page, guys. This is where you're going to have pretty much anything and everything that you need. Yeah, we are, Joel. It's a pain in the butt sometimes, isn't it? Guys, anything and everything that you need is going to come from this tutorial section. We're going to talk extensively this morning, the way we do every morning, about a high probability trend trade. Um, and this high probability trend trade, guys, this is the beginning for you guys. Like this is the first steps on the yellow brick road. This is you and Dorothy arm in arm doing that little hop thing, and you're on your way to go find the 10 man. On the high probability trend trade, and I'm going to go to the glossary of common terms, and I'm in such a great mood today. I hope you guys are too. High probability trend trade, what does that mean? That means that every indicator on every chart agrees for the trade. That means that your triggers are the strongest, that there's nothing in the way. Do you guys remember all those lines we looked at making the market bounce? Those are termination conditions. That's something in the way. We're going to be able to recognize that and not trade into those. Nothing between you and your target, guys. And the high probability trend trade, as we teach it in this classroom, or as it is taught, there's really no we, it's just me teaching it, is the basis for everything that you do. It's going to set you up for long-term success. It's going to change your world because the high probability trend trade teaches you to be a chart reader. And when it goes to the three trading rules, high probability trend trades, they're used after one of those lines reverses the market. And this is the trade that typically wins 70 to 80% of the time. This is the trade that creates confidence through the memory of success. This is the trade that if you can work it into your head to commit to it, this is the one that's going to turn you into a chart reader, guys. This is the one that is going to teach you to look at your workspace and take the information that your indicators are giving you, and you will be able to fluently recognize where the market is likely to continue. And that continuation point becomes an entry for a high probability trend trade, and ultimately becomes an entry for the rest of the trades that you're going to work into your plan eventually. You are going to understand where the market is likely to go. You're going to be able to use these key areas for targets. You're going to be able to use momentum indicators to let you know if it has a chance to reach that target. And then finally, you're going to understand where the market is likely to stop. And guys, this is the most key concept that we talk about because areas where the market are likely to stop are these giant areas that just reverse the market, or these areas that reverse the market from the low. These likely to stop areas, guys, these are where decisions are being made by the people that move the market. And just in case you were a little bit confused about it, we are not the people that move the market, guys. We are small fish in a great big ocean. Um, but these key areas, these likely to stop areas, guys, they're giant red flags saying no more trades into this area. Decisions are being made. And when they do stop the market, when they do reverse the market, they create the biggest advantage for us because the high probability trend trade that happens after one of these likely to stop areas, guys, that's the one that typically wins 70 to 80% of the time. That's the absolute best of the best. So we're going to talk about this one trade first, guys. And this one trade, high probability trend trade, it's three rules. Just three rules. Your brain is going to try to make more because more is always better, right? It's just three rules, and each rule individually creates or recognizes an advantage that's happening in the market. Your first rule, when it's met, when it's true, gives you the advantage of momentum. And guys, momentum fixes things. Momentum pushes a market in the direction of the trend. Momentum breaks areas. Momentum is that one that I just try to never do without. Your second rule is going to make sure that you're not trading into one of those likely to stop areas. No termination conditions. And the advantage that comes from that one being true is a clear path, nothing between you and your target. So if you have a freight train of emotion and absolutely nothing in the way, it's time to look for an entry, guys. And that's where your third and final rule comes to play. It's going to put you into the market where the market is most likely to continue. These three rules, these three simple rules, three advantages that create the recipe for the trade happen on two charts. We use a large chart and a small chart. And I'm going to give you a visual here. Your large chart is what the large crowd wants to happen. It's what's the people that move the market, the general consensus, right? Everybody's going up. The market's probably going to continue up. This is the one that is going to define your direction. Am I looking long or short, up or down? It's going to define the momentum. That's that rule number one. And it's going to define your areas, and that's rule number two. All of this happens on a large chart. All of this happens on one bar on the large chart. That very front runner right here is going to define direction, momentum, and areas, guys. Rules one and two out of three happen on the large chart. That's what the large crowd wants to have happen. And then rule number three is going to take place on a small chart. This is your entry chart. This is where you are going to refine that broad stroke of a brush, that slow moving one bar event, and you're going to take it into about 15 to 30 bars, guys. That's what the small chart does. It's a refinement chart. It's just an entry chart. You're going to pinpoint where the market is most likely to continue. You're going to enter your high probability trend trade there, and your small chart is a reflection of what the small crowd wants to have happen. The people that don't have the money to be in control, or the people that are taking profits early, the people that are fighting the trend, that are fighting the momentum, they are literally going to push you right back to the perfect entry to get you into the market. So keep it simple. Three rules, two charts. Remember, if you've ever been on a lazy river, like at the water park, you had to take your kids, your grandkids, something like that. The lazy rivers, if you go with the flow, it's easy, right? But if you tried to walk against it all day, you would be exhausted and worn out, guys. Trading is no different. Go with the flow. The large chart's the flow, direction, momentum, and areas, right? The people that fight it, they get you back to your entry. So we're going to talk about the three rules, guys. We're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. I'm going to show you what these rules look like visually. We're going to talk about the advantages, and I want you to begin speaking to yourself in terms of advantages. Every time you look at a chart, I want you to go back. Well, what advantages are present? Because it takes three to create a trade. We're going to talk about them, and we're going to make them easy to recognize. What I need you guys doing is simulating, practicing, getting out there with that monopoly money and breaking as many eggs as you can. What you will find is that every mistake creates an opportunity for learning, guys, and it's okay to make mistakes. It's okay to take losers. And honestly, I'd rather you guys took a loser with all the advantages than a winner that had none. Because what happens is if you're not practicing the correct rules, that short-term victory sets you up for long-term failure. If you're getting lucky, luck tends to run out the second you go live. So I want you guys simulating and I want you showing me what you're doing. Post those trades in class, post your questions in class. Let's get the line of thinking the way it needs to be. We will simplify today. We're going to talk about the high probability trend trade. That's the beginning trade, guys. That's for everybody. So if you're day one, day two, don't even worry about becoming a rock star, right? Worry about becoming a chart reader because it's going to set you up to be a rock star later. We're going to simplify. We're going to look at that high probability trend trade. What looks are you going to commit to? This is really the foundation of the learning process, guys, is recognition through repetition, learning the looks so that they become easy. And this is made possible by the step-by-step path to becoming a confident trader ASAP. And it begins with post your trades in class. This blue section is anything and everything you need to be successful with the software with an understanding of the rules. Post your trades, everything you do. And this is a picture. I want you to tell me why you did what you did. Your pictures aren't just for feedback, your pictures are confirming your ability to recognize the rules being met. Your pictures are you policing yourself, making sure that you are taking the correct trades. Your pictures are creating a story of your journey that's going to help you get to where you want to be. So tell me why you did what you did every time you do something. There are no wrong answers, guys. I won't shame you for breaking rules. I will talk about the advantages, but if I know where your mind is, if there's something that needs a little adjustment, we can work together to adjust it. Show me where you entered. Maybe we can find a better one. Or maybe it's the perfect entry. I'll just high five you and be like, hey, great job. Keep doing this. It's working. And then show me where you get out. Um, Management is the second part of the puzzle, guys. We're going to talk a lot about entries, but management's where the money's made, right? You're going to be able to get into the market right where it's most likely to continue, but then you've got to develop trust so that you can stay in that market until it's time to get paid. So if you show me where you exit and tell me why you took that exit, and sometimes, guys, you're just going to type on your chart, and it's always fun because I've done it. Why did you exit? Oh, I was scared. I was scared that I'd have to give my money back, so I took 2 ticks instead of the 50 that the market wanted to give me. And then we'll work together on that, and we'll try to help you overcome that fear, and we'll come up with some drills to help you get through that. But guys, the more information that you give me on a chart, the better the feedback is that I can give you, because every chart opens up the door for a conversation. The second thing that I need you to do is use the spreadsheet that Nexgen provided you. You can find it in the Nexgen Study Picks license agreement. But your spreadsheet, and mine's not open, I'll show you mine too. Your spreadsheet, I can't talk, has 3 tabs. It has a tab for your tracking. It has a tab for your pictures so that you can build your perfect plan. And then it has a tab where I've cheated a lot and stole pictures from you guys so that you could have something to study this weekend. Abdul, as you begin to get more comfortable, Mike, keep going back. Jay Page, guys, go back and start looking at some of these pictures and see what people are doing with the software. Take your little list of advantages and go, oh, I see these advantages. I see what's going on. And this is how you begin to build recognition. But the first page for the new user is a very important page because the first page is your trade journal. Whoops. Man, I can do this, I promise. There we go. Your trade journal. Every time you pull the trigger, I want you to put a picture in the first tab of your spreadsheet. You're going to talk about what type of trend it was, or what type of trade it was. Was it that high probability trend trade, or was it the first medium probability trend trade that I'm going to introduce you guys to? It's going to ask you how you felt, and you will be amazed at the correlation between how you feel and how well you followed your rules. So Haji, right down here at the bottom, you'll see these tabs. And if you just click on the tab, it'll take you to whichever page you want to go to. Absolutely. It's going to ask you what the conditions were. Did you have the advantages in place that you needed to take a trade? It's going to ask you what the result was. I want you to get in the habit of filling this out every day, guys. And then there's a notes section. In the notes section, you're going to present this picture to me. And you're going to say, Mark, this is the trade that I took, and this is what was going on. And I might say something like, hey, that was perfect. Everything was great. Don't miss this setup. Drop that in your notes. Or maybe I'm going to tell you, ooh, you traded into a termination condition, one of those areas likely to stop the market. Put that in your notes because this first page is doing 2 things for you guys. It's creating recognitions of patterns that are bringing you success, and that's huge. Pattern recognition is a big part of what we do, but more importantly, is it's going to create the ability to recognize patterns in you that might be taking away from your success. And that's one of the things that I'm good at, guys. If you do the same thing over and over, I see it and I tell you about it. Hey, here you are breaking that rule again. This seems to be your thing. Let's see if we can work through that. Um, this one is great. What worked? Keep doing it. What didn't work? You can mentally commit to trying to avoid that. What felt easy? Well, the things that worked typically feel easy. And the ones that don't work, when you know you're breaking your rules, guys, you're going to get nervous. Your palms are going to get sweaty. And you're literally in the back of your head, you're going to hear yourself saying, man, I hope this crappy trade works because if it does, I'll be rich. And then when you get stopped out, you're not surprised, but you have to go back and look at it so you don't make that mistake again. And this little historical study each and every morning, guys, it prepares you for the day, but more importantly, it accelerates your learning. It sets you up and puts you in a position where you're going to get to where you want to be faster. So, recognition, guys, recognition. Let's start with our recognition. Let's go to the high probability trend trade. And I want to cordially invite each and every one of you, if I'm discussing one of the concepts, one of the rules, and you have a question, don't wait for me to finish talking. Drop it right in the room. Hey, Mark, I need you to rewind. Hey, Mark, I need you to clarify. Don't wait till the end and hope that you remember. It's okay to interrupt me. I don't have a time schedule, guys. I have a boss, but I grew up with him, so he doesn't yell at me too much if I make this last a little longer than it needs to. So we're going to talk about strong triggers on the large chart. This is rule number one. Rule number one is designed to give you the advantage of momentum. And the cool thing is the only way that you can have the advantage of momentum is if you're trading with the direction of the market. How's that for a safeguard? If the background on your large chart is green, you're in an uptrend. The market's going up. You should only be looking for rules to be met for high probability trend trades long. If the background on your large chart is red, it's going down. You should only be looking for rules to be met for high probability trend trade short. Guys, this is going to eliminate an awful lot of mistakes. And let me show you just how easy it is. You ready? Bum, bum, bum. Which direction is the NASDAQ going, guys? Up or down? Help me out. New users, don't be shy. Give me a U. Give me a D. What do you think, Abdul? Up or down? And you know what? True story. I had somebody that was colorblind once. He's like, "Hell, Mark, I don't know. If that's you, let me know." Anybody? We're going up, right? Are we going up? It's red. That's cool. I'll just rip through this stuff, guys. That's going down. That's going down. That's going down. Three markets going down. Thank you, James Bird. Guys, I want to remind you right now that I know this stuff, right? I can identify this at the drop of a hat. My goal is to get it to where you can. So if you're going to be shy about the easiest question in the day, guys, you're going to be a wallflower. You're never going to dance with that cute girl. Rule number one says strong triggers, guys. In order to have strong triggers, everything has to be the same color. Your small triggers, those solid lines, your large triggers, those dashed lines, they have to be the same color. And in order for the trigger lines to be strong, to have that advantage of momentum, guys, you have to have your small triggers break above the large triggers. When they break above the large triggers and create space, everything is wide and angled in the direction of the trend. Guys, this is a strong trigger look. This is the situation where the odds are favorable for the market to continue up. Odds favorable momentum. You're going to hear it in the room all day long, guys. Did you have odds favorable momentum, or did the small triggers return, get inside of the large triggers? Did they weaken? Strong, weak. Odds are favorable for the market to continue in the direction. Anything can happen up or down. Guys, there's a huge advantage in momentum. Momentum is going to break areas. Momentum is going to push the market in the direction of your trade. Momentum is going to carry things the way you want them to go. In a downtrend, the small triggers are below the large triggers. They're all wide. They're angled in the direction of the trend. The space created between the two lets me know that the odds are favorable for the market to continue down. As the small triggers get closer to the large, the momentum is weakening. Guys, when you have strong triggers, it is the best look, the best of the best look for buying Fibonacci support on a smaller, faster chart. Your one bar on a large chart looks like it has a tail or a wick. It's like a pogo stick. This isn't how we get into the market. The large chart defines the momentum, guys. This is a pullback on a smaller, faster chart. This is where you're going to pinpoint exactly where the market is likely to continue and where you're going to enter so that you can get to that next key area. And you're going to see these tails on a large chart and they will become a study tool. Abdul, we're making it right now. You are in production right now, going through what they are and how to use them. And the first one is momentum. So the video that I gave you yesterday, guys, I'm creating a video right now. The same video that I make every day in the first hour talking about the highest probability trend trade. If you go to the live section on the YouTube page, guys, there is a million that discusses exactly what we're looking for to get into it. And then when you go to the video section, if you're more interested in the indicators and how they come to be, let's go to the search bar. There's a whole section on the indicator introduction and stuff like that. If you're one of those, I need to know what makes it tick before I can use it kind of people, my engineers and stuff like that. All the videos you could ever hope for are on the Nexgen YouTube page. But the cool thing is we're building the video right now. We're creating the video that you want to watch on how to use it by focusing on these three rules, engaging on the advantages, guys. And right now we're talking about the advantage of momentum. And if you go to the live market, once again, all my triggers are not the same color. Therefore, I don't have the advantage of momentum. My small triggers have worked their way back into the large triggers. I have lost momentum. My smalls are below the large, they're wide, they're angled in the direction of the trade. I do have odds favorable momentum. And guys, that's really as simple as it can be for momentum. If there is separation, like scissors, open, ready to cut, you have the advantage of momentum. Any other situation other than this look or this look, that advantage goes away. And if the advantage goes away, well, then you can't have a high probability trend trade. Is everybody good with the idea of momentum? Give me a Y, please, if you're comfortable. Separation between the small and large, guys. That's the defining look, and that's what's going to set you up. This is the look that breaks areas. This is the look that, oh man, I just won't do without. You love FIB. I know the acronym. No, it's okay. What color EMA? No, it's not a bother. It's never a bother. So you're worried about the color of the midband, right? Is that the EMA? Am I correct there? Cool. So Abdul, we're going to do two things. I want you to give me just a skosh of trust here. We are going to talk about momentum, and momentum has nothing to do with the EMA, which is fortunate. It's one less thing to think about. When we talk about the clear path, we will talk a little bit about the EMA, and I'll add some extra in there for you so that you're comfortable with it. But that EMA really isn't going to come into play until we talk about our entry area on the smaller, faster chart. So we're going to piece it all together, kind of one piece at a time, and don't ever hesitate to ask questions. And what I'll do is sometimes I may deflect. Absolutely, you have to put it together, right? Abdul, have you ever run a race? Whether it's a foot race, a car race, a motorcycle race, a boat race, any kind of race at all. Have you ever had to get to a finish line? Absolutely, right? Were you ever able to get to that finish line without doing the race part first? Never. You can't just skip to the end. You got to go through the process to get there. That's what we're doing right now. Is when I teach this classroom, and I love it that you're being vocal. This is huge for me, and this is such a plus. We're going to talk about direction first, and then we're going to add to direction momentum. That's rule number one. And then we're going to add to momentum that clear path, and then we're going to get to an entry. So I'm going to do it sequentially, in an effort to make it easier to break it down to understand the whole. Cool? I love it. Don't ever stop asking questions. Don't ever stop asking questions. You guys don't realize this, but when you ask me questions, it makes me rethink everything. It makes me go through and kind of make sure that I'm not missing things. So thank you for that. Rule number two says that we have to have a clear path, that we haven't reached one of those areas that may stop the market. So here's the first lesson where the EMA comes in. These are the areas that may stop the market. These areas are on the large chart. So here's your roadmap to what we're looking at. When I'm talking about termination conditions, areas that may stop the market, I'm talking about red Fibonacci resistance, really the core of what we do here at Nexgen, blue Fibonacci support. I'm talking about yellow one-to-ones, and then I'm also talking about a divergence high. And what divergence means, new users, is if the market goes up and down, we call this a pivot. If the market pivots and a magenta line prints from the tip of that pivot, it means that momentum isn't following price. That's all it is. It uses MACD BBs in the background. There's some calculations that happen, but you don't have to do the math anymore like the people that got Nexgen 20 years ago. If a cyan line prints from a low pivot, it means that there's a loss of momentum at that area. These losses of momentum become kind of lines in the sand to help us understand and look at where the market may reverse. And then there's that EMA, that mid-band. And what you're going to find is that this EMA can behave as a termination condition, but there is a set of conditions that goes with it. That mid-band will behave as a termination condition if your large triggers, those same large triggers that are part of the calculation of momentum, if they're a full bar away. And I'll find some examples of that. But what you will notice is that mid-band, if price is trading below it, it's magenta, and a magenta mid-band has the potential to act as resistance. And if price is trading above it, it's green, and that green mid-band has the potential to act as support. So what you'll find is the same way your background is color-coded, so is your mid-band, and really so are your fibs. Red is resistance, blue is support. So how do we know if we've reached an area? How do we know if an area is likely to stop the market? I'm so glad you asked. Let's go through it. Two things have to happen. Two things have to happen in order for an area to be considered a termination condition. The first thing is that price reaches the area, because these areas, these are where decisions are made. These are where targets are reached. These are where entries are taken. These are where the people that move the market are making decisions. And I want you to think about it that way. A decision was made at this Fibonacci resistance. A decision was made right here at these yellow one-to-ones. So we want price to reach the area first. We want the decision process to be set off. Your dynamic Renko bars come down, they reach Fibonacci support. Maybe sellers are exiting positions, maybe buyers are entering positions. The reality is we don't know. They don't send out a telegraph to let us know what's going on. So if price reaches the area, what we can do as Nexgen users is ask ourselves, where are the trigger lines? If the trigger lines remain above this area of support, support is behaving as a termination condition in the moment. We don't know whether it's going to bounce, we don't know whether it's going to reverse, or we don't know whether or not there's going to be an all-out brawl between buyers and sellers. So if price reaches an area and none of the triggers are able to break through, we can sit on our hands and do nothing, and we can wait for that reaction. And I want to show you, because we were looking at NASDAQ. NASDAQ was putting on an absolute clinic. And I'm going to open this up. Resistance, no triggers. You guys knew not to go long. Support, no triggers. You guys knew not to go short. Don't go long, don't go short. Eventually, the areas break. The path is clear. There's those tails with odds favorable momentum. Guys, when I talk about termination conditions, the easiest money that you will ever make happens in between termination conditions. When an area reverses the market and before it gets to a potential stop point. So allow it to be simple. If price reaches the area and the triggers don't break, sit on your hands and do nothing. Wait for the clear path, and the path becomes clear when both the small and the large triggers get to the other side of the area in question. So for the brand new user, if price reaches an area and the triggers don't break, sit on your hands and do nothing. If both the small and the large get to the other side of the area in question, well, now you have a clear path. Now it's time to look for your rules to be met. And I want you to see something cool. We have odds favorable momentum. Small and large get to the other side of resistance. It behaves as support. And there's one of those tails, guys. There's one of those potential entries. No clear path. There's a clear path. I want you to keep it simple for just a few days until you get comfortable with the idea of termination conditions. I'm going to share with you guys some pictures. These are termination conditions at a high point. And notice that I wrote the recipe on there. The recipe never changes. Price reaches the area. If the triggers remain below, sit on your hands and do nothing. You just don't know what's going to happen. And the same is true at lows. If price reaches these areas and the triggers remain above, sit on your hands and do nothing. Guys, doing nothing is the hardest thing you will ever do as a brand new user. If small and large get to the other side of the area is broken. The path is clear. Look for the trade. And we saw that over here on the S&P. Let me blow this up. No triggers through. Eventually they break. Support acts as resistance. With that clear path, there's odds favorable momentum. We haven't reached the next area. There's those potential entries, guys, to get you in. This is the NASDAQ. Let's see what's happening right now. The smalls are through, the large are not. The area is not broken yet. Guys, does that make sense? No triggers, no trade, no reason to go long, even with the momentum. Until the small and the large break, guys, you're hoping an area breaks. It's not broken yet. And this actually is your first 50-50. This is your first medium probability look. And new users, I want to remind you, this is a lot on day one. I know that it is. This is a lot on day two, but we're going to piece it together and we're going to turn each of these individuals into a trade. So no triggers, no trade. Both triggers, the path is clear. And then we have one more look where areas have the potential to break, guys. And this is not high probability because it's not a clear path. But when you have odds favorable momentum, that best of the best, that look that breaks areas, and your small triggers smash through the area in question, but your large triggers haven't made it, 50% of your triggers are through and 50% are not. Hence the name 50-50 look. A 50-50 look means that I have the potential to break. This area has the potential to break, but because it's not broken yet, I don't have a clear path. And this is important because when you know what you're up against, you know that you need to manage assertively. You know that you need to not forego momentum. You know that your entry area needs to be perfect. Guys, this 50-50 look will be your first medium probability trade. I will give you a plan for that 50-50 look. I will give you the best of the best way to take this trade because I want you to look down here, even with odds favorable momentum. That area never broke. It ended up going the other direction, even though the fib turned red, because trigger location dictates whether an area is broken or not. And guys, this is rule number 2. I'm going to go through a couple examples. We're going to talk about it. We're going to keep it slow. But I want you this weekend to open up a large chart, to scroll back and see how many times price reached a key area and wasn't able to breach. And what you'll find is that when it did breach, it started pushing through with unbelievable momentum. That's kind of what gets you going the right direction. So back to the user guide. No triggers, no trade. Small and large, the area is clear. The momentum is strong. There's your tail. Smalls through, large not. Potential to break. Those are your options. Price comes down, goes up, creates this divergence line. There's a loss of momentum. Price creates this area. It doesn't reach it. And that's a key part to using these divergence lines. The market goes up and comes back down. And here, price reaches the area. When price reaches the area, that magic question, guys, where are my triggers? They remain above. No more short trades. This is what we call a pivot stop out of a prior divergence line, guys. When price exceeds a little bit, the triggers stay above, and then it heads in the other direction. This pivot stop out is an awesome termination condition. This pivot stop out, if it reverses the market, we're going to call it a strong bottom, guys. This is a huge indicator to let you know when the opposing force may be taking over from the sellers. These pivot stop outs become even more powerful when they correspond with Fibonacci resistance. So this is a great picture because starting at the left, price is moving up, everything is going, and it reaches Fibonacci resistance. And you can see pretty easily that the trigger lines remain below the area. And this is everybody's red flag. Don't go long. Wait for the reaction. Let's see what happens. Well, the reaction is it pushes all the way back to Fibonacci support. And then once again, all you're doing is asking yourself, where are the triggers? Well, the triggers are 3 miles above. The triggers are more than a full bar away, which means that not only is support acting as a termination condition, but so is this mid-band. So Abdul, here's your first introduction to, I think he left, to using the mid-band. Guys, if a mid-band is reached and the large triggers are a full bar away, it behaves as a termination the same way fibs will. Price comes back up to resistance, to a divergence high, to a second resistance. The triggers can't get through, guys. There's no reason to go long even with green triggers. Now we have a pivot stop out. It corresponds with Fibonacci resistance, and it ultimately reverses the market. This is now a strong top. When the large triggers go red, when the small triggers go red, when everything agrees, this termination that reverses the market is a strong top. Notice that from this strong top, I have odds favorable momentum. And on that one bar, I haven't reached Fibonacci support. Guys, rules 1 and 2 are met. There's one of your tails, one of your potential entries. This is the highest probability trend trade that you can take, is a trade that happens after a termination condition reverses the market. One more picture on using areas, guys. This is my favorite picture on using areas. Because we're sequential for a reason, guys. We talk about these things in order very much for a reason. There's a reason that I talk about direction first, because when you have direction, you can identify strength. And then once you identify strength, you have to make sure that you're not trading into an area that can stop the market. So even with strength, price reaches these yellow 1-to-1s, and when it does, none of the triggers break. If you're banking on momentum and foregoing a clear path, guys, you lose pretty quickly on this trade. The triggers told you that the area is likely to stop, create a bounce. And the bounce is exactly what it does. The buyers push up, and all your triggers are below resistance. You can't go long yet, and you can't go short. Your trigger lines don't agree in color with each other or the background, and this fight ensues. And you see this at fibs, guys. You see this happen at fibs. This is your 90%. This is your 90% of your day. 90% is waiting for advantages. 90% is reading your indicators, sitting on your hands, doing absolutely nothing. Your 10% comes when you have odds favorable momentum, and when you couple it with a clear path. And that becomes your entry, guys. That tail on the large chart is a pullback on the small chart. That is getting you into the market. This is your 10%. This is where your patience is rewarded. And it's what you don't do, not 0%. That's a horrible percentage. It's what you don't do when there's nothing to do, right? It's your ability to sit on your hands, to wait, to be patient, that lets this runner all the way up to Fibonacci resistance. How much of this money are you going to keep? That's the profit potential, right? From your entry to the fib. We'll do that in red. In white, well, okay, we'll do it in white, sorry. And then what we'll do is I'm going to draw another arrow in yellow. And this is how much money you gave away trying to take the wrong trades, doing absolutely everything when there was nothing to do. And the sad reality is that's all you get to keep, right? So the key is to not give away that money during the 90%, to commit to sitting on your hands, to doing nothing, waiting for that advantage, guys. Because the one thing that I know for sure is that it's coming. The market rarely stays in a state of chaos forever. Eventually, everything lines up, and your trust that that will happen has to outweigh your fear that the market's going to go without you. Good morning, Jose. Nice to see you. So, is everybody comfortable, or at least at the beginning stages of comfortable, that the large chart leads the way? The large chart is going to define direction through color. Is it going up or down? It is going to define momentum with the T3 trigger lines. The separation means that it's likely to continue in the direction of the trend. And then finally, we just defined areas on the large chart with the recipe. If price reaches one of those lines and absolutely nothing, no triggers break, we can sit on our hands and do nothing. And guys, this right here shows you exactly what it should look like on a large chart when it's time to look for an entry. Notice that the background is green. My small triggers are green, my large triggers are green. They are wide and angled in the direction of the trend, and there's space between small and large. Rule number one has been met. I have the advantage of momentum. Price has not reached one of these key areas. Fibonacci resistance is off in the horizon. Rule number two is met. I have a clear path. Now it's time to go to the small chart. Now it's time for rule number three. Now it's time to pinpoint where the market is likely to continue. This should be your focus for the first 20 days, guys, is getting in at the right spot, because great entries create manageable trades. Rule number three says that you're going to use a limit order. You're literally going to wait for the market to come back to you. And you're going to have that limit order waiting at an area. And when I say areas, I mean Fibonacci support or resistance, yellow one-to-ones, and then Abdul, for you, mid bands, that EMA. But the key is they need to be nestled inside of what we call favorable large triggers, guys. And favorable large triggers means that on your large chart, your large triggers, the smooth dashed lines, and your synthetic triggers, those stepped dashed lines. And just for you guys that need to know everything about everything, these synthetic triggers are nothing more than the large triggers on your large chart. That's all they are. It's the same large trigger on the large chart, but it's transposed over to the small, because when the large and the synthetic work together, one on top of the other, wide in the angle in the direction of the trend, we call this a favorable large trigger. And we call it a favorable large trigger because it's going to provide you the smallest window of opportunity, which means you get the absolute least amount of risk. So favorable large triggers. Rule number three has you focused on buying or selling a pullback. Remember, the small crowd fights. Buying or selling a pullback at an area inside of those favorable large triggers. So when the large chart says go, odds favorable, momentum, clear path, everything is up, let's go take a look at what your small chart's going to look like. Your small chart is going to say up to. Your small chart should have odds favorable, momentum. Your small chart is going to be green. Your small chart is going to have large and synthetics working up, one on top of the other, strong and angled in the direction of the trend. You've made the decision that it's time to look for a trade. Trades come from lines, is the easiest way to put it. Trades come from fibs, mid bands, or yellow one-to-ones. You know, it took me about a year to realize that that was called an EMA. I just always called it a mid band. But we want these lines inside of favorable large triggers. And we also want that small crowd to do their thing. It's a mid band, Paul. Synonyms. EMA is the technical term. It's something moving average. I don't know what the E stands for. It's a mid band. Cool. So we're going to let the small crowd do their thing, guys. We're going to let the small crowd force a pullback. I knew somebody would have it. Thank you, guys. I love it. Abdul, don't hold back on me. Keep them going. You'll get a lot of the answers. Um, Remember to keep it simple, though. Exponential moving average. That's a big word. I like it. I like midband. It's easier to spell. Yeah, everybody's going to encourage you with the questions too, Abdul, because what you'll find is the people that seem to be where they want to be with their trading are the people that ask me the most questions. So don't hold back. Guys, when the small crowd does their thing, when they start that pushback, it begins with a reversal bar. A reversal bar is just a bar going the other direction. That's all. Everything says up. The momentum is the strongest. The path is clear on the large chart. You turn your attention to the small chart and you wait for a reversal bar. At the time of the reversal bar, you're going to create your window of opportunity. You can draw it, you can do it in your mind, whatever works. You're going to look for the highest point of support, meaning the area, fib, midband, or yellow 1-to-1, inside of favorable large triggers, closest to price. And you're going to look for your furthest, your lowest point of support, fibs, midbands, yellow 1-to-1, furthest from price. And the key is we want them inside of favorable large triggers. And this picture is a little deceptive because your large triggers are moving averages as well. I don't know if they're EMAs, but they are moving averages. So they're moving up while price is moving down. So if you have an area a tick or two above them, it's probably going to get swallowed up. So my window of opportunity goes from the highest point of support to the lowest point of support inside of favorable large triggers. This is the point where the market is most likely to continue. This is where I'm going to activate a limit order right at the top of that window, and I'm going to wait. I'm going to pray a little bit maybe. And if price pulls back to that highest point of support inside of favorable large triggers, I'm in a trade. I'm in a long trade. I'm in a long trade with the advantage of momentum dictated by strong triggers on the large chart. There's that first piece. I'm in a long trade because I also had a clear path, meaning that there were no termination conditions on the large chart. There's the second piece of the puzzle. And finally, I am in the market in a long trade at the point where the market is most likely to continue, my entry area. And that was defined by entering at the area inside of favorable large triggers. Moving averages correct themselves. And when we give them a bounce point at that correction, guys, this is where the market is likely to continue. This is your entry. Large chart says up. Large chart says clear path. We wait for a reversal bar in a small chart. We're going to actually fight. We're going to buy as the market's coming down. At the time of the reversal bar, I'm going to highlight from the highest line of my triggers to the lowest line of my triggers. And this is where I'm going to look for those areas. This is where I'm going to look for fibs, midbands, or yellow 1-to-1s. This is just telling me where to look, guys. This isn't my window. And then I'm going to build my window from the highest point, closest to price, to the lowest point, closest to price. This white box represents where the market is most likely to continue. Is everybody with me so far? Large chart says odds favorable. That's the first advantage, guys. Don't forego it. It's a big one. Odds favorable momentum, OFM. Large chart says clear path, no terminations, guys. This always sets the tone. Small chart, reversal bar. We look from the top of the triggers to the bottom of the triggers, from the highest point of support inside of those triggers to the lowest point of support inside of those triggers. You guys activate a limit order a tick or two above, guys, and this is your high probability trend trade. And if the market comes back and hits your limit order, you're long with all the advantages. If it goes a little deeper, you don't panic because you're still in the window. And if it goes even deeper, you don't panic because you're still in the window where the market is likely to continue. And this is one of the magical parts about what we do, guys, is if we know where it's likely to continue, we know exactly where it shouldn't go. You can put a protective stop 4 or 5 ticks beyond that window of opportunity, right where the market should not go, because if it goes beyond, Well, you've lost that third advantage. You don't want to be in that trade anymore, guys. And I'm going to tell you right now, you will take losers with this methodology. You will hit that stop. And you're going to have to fight those feelings of, oh my gosh, I can't believe I just lost. Oh my gosh, am I doing it right? And I want to remind you that anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time, guys. This is a cost of doing business. This is paying rent on your storefront, guys. You will not have 100% winners. It's so rare. You may have days where you have 100% winners. But overall, 70, 80% is an awfully good rate on a high probability trend trade. This becomes a trade that you learn the looks, that you start to commit to, that you never miss when it sets up, because this is the trade that 70 to 80% of the time it's target reached. The pullback, the entry, the bounce, the target. Guys, this is why we teach the high probability trend trade first, because it teaches you about momentum. It teaches you about a clear path. It shows you how to find the best of the best entry with the least amount of risk and the most amount of profit potential. Those tails I talked about become a study tool. Absolutely, I will, Abdul. Um, Those tails that we talked about on the large chart, when there's odds favorable, when there's a clear path, notice how the square comes back to an area of support inside of favorable large triggers. This is how you can study historically, and we'll do clear path lesson as well as we go back and look for a tail. Um, Let me get this. So small triggers below the areas, large triggers are not. Area with the potential to break but hasn't broken. Price reaches resistance, Abdul. No trades. We don't know what's going to happen. We have absolutely no idea. So we wait for small and large to get beyond the area. Now the area is broken. And what you'll see, and we'll use this one for an example because this is a great one. Price reaches, the triggers haven't broken. We're going to sit on our hands and do nothing. Small triggers smash through the area with odds favorable momentum. These areas have the potential to break. Small and large breaking through the area. Oops, I went too far. Sorry about that. Small and large break through the area. Now the area is broken. And that's exactly how that process is going to go in the live market. If it's going to break, is it's going to start where you just have to admit that you don't know. And then you're going to recognize the potential. And then it's finally going to break. And then watch this. That resistance behaves as support with odds favorable momentum and a clear path. And this might have been a little deeper push, but let's see what that tail looked like on a smaller, faster chart. Pulled back to support, but it did pull back to support outside of those triggers. This may not be your trade. This is not a high probability trend trade, but the large chart still led the way right up to Fibonacci resistance. Eventually, you'll catch this trade. But as a high probability trend trade user, it's just not yours yet. If I come down here after the termination reverses the market, small's above the large, we haven't reached the fib. Straight off of Fibonacci support inside, or straight off a mid-band right there at favorable large triggers. And if I scroll back, breaks, pulls back to, we see that a lot, and I know we saw some tails earlier, right? Let's see what these look like at 9:16, guys. We had a termination, right? Pulled back to resistance, all the triggers below, that started the push down. Mid-band inside of favorable large triggers, mid-band inside of favorable large triggers, mid-band inside of favorable large triggers, mid-band inside of favorable large triggers. In between the key areas. Pretty cool, isn't it? So Abdul, the whole idea, not just Abdul, but everybody, the idea is that you don't have to sit and hope. You don't have to wait. You don't have to want. You don't have to wish. If you keep it pretty simple, if you focus on Sorry. Making sure that you're trading with the direction of the market. Making sure that if it's green, you're going up. If it's red, you're going down. That's your first advantage outside of the rules. And then insisting on strong trigger lines, insisting on a market that's likely to continue in the direction of the trend. That's the second advantage. So if you're not comfortable with the look of momentum, go study it for a day. Ask a bunch of questions before you try to piece the two together. And then once you're good with momentum, scroll back 10 days and start figuring out termination conditions. Take pictures, drop them in the room. Some of my favorite pictures, are you ready? Is if you take a picture of this right here and you draw an arrow, and all you have to do is say, hey, Mark, is this a term? Right? Hey, Mike, good to see you, bud. You're going to say, hey, Mark, is this a termination condition? And then what I'm going to do for all of you newer users is I'm going to say, let's break it down to its most basic form. Price reached Fibonacci support. Where are your trigger lines? Are the small and the large through the area of support? What do you think? New users, work with me here because I'm going to teach you to answer your own questions. Have the trigger lines broken the area? Are small and large below this area of support, guys? Anybody? And this is where your brain is going to say almost, kinda, sort of, right? But the reality is that it has not, guys. We do not have a clear path. Rule number 2 is not met. And you will really begin to think in terms of this and advantages. I don't have the advantage of a clear path. Here, I had the potential to break, but the large triggers never got through. And look at the freaking bounce that comes off of the area, guys. This is how I want you to work. And if you don't put the questions in the room, if you don't start asking, oh, that news rocketed. And then here's a great example of why we respect termination conditions. Look at what happened off that area that hadn't broken. Pretty amazing, isn't it? And then just for grins, ladies and gentlemen, it was news, Paul. You didn't trade during news, but you sure could have taken a long trade, and it didn't hit a darn thing. So if you're brand new, let it be simple. Go in order. Start with direction. If you have trouble with direction, it's your job to ask me. And then go into strong triggers. And if you can't recognize a strong trigger, it's your job to ask. And then let's talk about termination conditions. And you'll get to the point to where you recognize them, but you have to practice them. Watching a video on termination conditions isn't going to make you a champion termination condition person, but it's a start. And then you're going to focus on entries, guys. And I'm telling you, once you get entries, everything else works itself out. Everything else becomes easy. Support held. Resistance, support, straight to resistance. Right off of support. Crude oil. Look at how support and resistance held up the market until it finally broke. And Abdul, exactly. That's the first advantage that you can give yourself. If the background is green, don't fight the trend, right? Have you ever heard that old adage, the trend is your friend? It's so true. It is so true. And what it does is it creates a little bit of patience and it keeps you from forming an opinion. Because what happens is sometimes people form the opinion, well, that's a red line, the market should go down, right? I'm going to look for a short. And what happens is more often than not, when you start fighting triggers and trend, the market does that right there. It just runs it over. That's a blue line. I'm going to go long at this blue line, but you're not going to fight direction. You're not going to fight momentum, and it keeps you safe from taking those trades. And I think that that's one of the biggest advantages that the background colors do is they keep you focused on looking for the right direction. And then once you have the right direction, Abdul, the only way you can have the best momentum look is if all the colors match. So it's almost like the safety net for you. I'm only looking for up, and now I have to make sure that my colors match. And then once my colors match, I have to make sure that I'm not trading into one of those lines. And if I'm not, well, then maybe I'm going to find that perfect entry. And it's a sequential kind of thing. It's kind of fun. And it's amazing how it clicks. How do you like that? So Abdul, here's your learning to trust fibs. Look at the reaction. Price reached, triggers didn't break. Every one of the people that believe in what we do said, no way on God's green earth am I going short. Not going to happen. And now this termination has reversed the market, and I have odds favorable momentum. And with this odds favorable momentum, I can identify where the market is most likely to bounce in the event that we get a pullback, and it's somewhere in this range right here. It's not guaranteed, but I have a termination that created a full reversal. I have odds favorable momentum. There's my reversal bar, there's my area of support, there's my window of opportunity, and it's already gone in the direction of momentum. It's already gone in the direction of the trend. It's already bounced off my area of support inside of favorable large triggers, and I'll be great googly moogly. Look at the distance that took. And with all that momentum, where's the market likely to go? If it follows through, that becomes an amazing target, doesn't it? And Abdul, what you just watched live in front of you was a high probability trend trade come to play. And all of that momentum, we can identify where the market is likely to go, but we're not in control. And sometimes it's going to fluctuate on the way. But the large chart leads the way. Feel free to be amazed. And then these divergences on a smaller chart become a management tool as you get into the trade. So that's our first hour, guys. That's our first hour every day. I'm going to give you a high probability trend trade checklist. And guys, I wanted to repeat, you can trade anytime. And what the patterns that we teach, one of the great things, Abdul, is I show you patterns on crude oil on the S&P, sometimes on the NASDAQ. I have people that hedge their soybean funds. I have people that trade cattle. I have people that trade, silver and gold and Tesla stocks and Apple stocks, and people hedge their options. All we're doing is trading patterns. You can use them on any time frame, any market. Dwight, in a long trade, your window of opportunity extends from the highest point of support to the lowest point of support inside of favorable large triggers, right? So let's go through it. If this is my window for a long trade, Dwight, my entry is just above the highest point of support, not below it, because I'm expecting it to bounce off of that area. And if I put an entry below it, I risk not being caught. Does that make sense? My entry is just below the midband, because if I put it up above it, well, it may bounce off the midband like I expect it to. So when you're placing an order, when you're activating that limit order, it's a tick or two above the highest point of support or a tick or two below the lowest point of resistance for a short trade. All right, Abdul, I want you to save this one to favorites, brother. This is absolutely, James. Abdul, they're already built into the workspaces, 100%. So when you open your software, whoo, look at that, momentum for the win, guys. Your time frames are already built in, exactly what you need. But don't worry about time frames. I want you to think in terms of large chart, small chart. Don't worry about the numbers that are associated. Don't care if it's a 34, a 13, a 5. Don't worry about anything other than large chart and small chart. Remember, simplicity pays dividends. So is the market coming from a good top or bottom? Whoops. This video right here on the spreadsheet on the checklist, Abdul, that is my brother talking for 45 minutes about termination conditions. This is one of the most helpful videos that I've ever watched in my life because it helps me understand when areas may hold and when they're likely to break, and when they have held and reverse the market. Guys, if you're brand new, the video on this checklist is outstanding homework for the weekend. All this checklist is doing is reminding you what it takes for an entry. That termination that creates a full reversal, odds favorable momentum, nothing in the way in an area inside of favorable large triggers. This is designed to get you into the market. I've never had anybody use this checklist to the letter and do worse than 70%. I just dropped it in the room, guys. You can download it. You can click and drag it over to your desktop. I'm going to give you another checklist. Good top or bottom. And here it is visually for you guys that need to see it. Odds favorable momentum, odds favorable momentum. Anything can happen triggers. Guys, this is where your luck runs out. Good morning, Miss Debbie. No trade, potential to break, area broken, clearly defined in pictures. And then here's your window of opportunity for both longs and shorts, guys. So here's your visual representation of what each rule means. Print the first one out and put it on your desk. Remind yourself what you're looking for. Take the second one and study it for a few minutes before you get going into the day. And then finally, I'm going to give you what's called the KISS plan, the Keep It Simple Sunshine Plan. One of the traders that I respect very much, has been with Nexgen for a long time, has found an enormous amount of success with our software, told me once, Mark, if you don't have a plan written down, you don't have a plan. And when you don't have a plan, you're subject to emotion, to fear, to greed, to want, to wish, to hope, rather than taking a pragmatic approach to entry, a pragmatic approach to exit. And what you're going to find is it's going to skew your results. So I'm going to give you guys this KISS plan, and this plan is a stepping stone on your journey. And it's designed to optimize your chances of success with the high probability trend trade and with that 50-50, that medium probability trade. I'm going to give you the best scenario to take it. This is not the end of the road for 95% of you guys. You're going to look for opportunities outside of this very simple approach. And I encourage that, and I want to be a part of your journey. And the more pictures you post, I'm going to help you get to where you want to be. And it's going to be your simulation, study, class feedback, and continuous practice that allows you to build a plan that suits your needs, that allows you to build a plan that embraces the patterns that you recognize. And it will be your experience, your understanding of reading the indicators that creates this plan, guys. And I'm telling you, I'm not trying to shackle anybody to this KISS plan. But I'll also tell you that there's an enormous amount of success to be had if you follow it to the letter. Typically, people are doing about 85% winners with this, that have shared their results with me. And this simple plan for consistency, it starts with never fight the large short direction or triggers. Guys, don't fight direction or momentum, and it's going to eliminate 60 to 70% of the mistakes that new users typically make. The first part of the equation is defining your entry, getting in at the right spot, making sure that you're taking a trade from the point where the market is most likely to continue. That's what we've just spent an hour talking about, that entry at an area inside of favorable large triggers. Start taking pictures, guys. Every time you see the rules met, every time you have an entry, take pictures. Go to your spreadsheet, go to your favorite looks, and when the rules are met, drop it in there. Make sure that you get that recognition through repetition. Once you're comfortable with your entries, guys, that's the first piece of the puzzle. The second piece is management. And what we have found over decades of teaching people to read indicators is that taking the same pragmatic approach to management initially, as you learn to read your indicators, keeping it if then, keeping it very focused without opinion, this is the best step. Because everything revolves around getting into the market at the area inside of favorable large triggers, at the area where the market is most likely to continue, at the area when you have the advantage of momentum and a clear path and that perfect spot, guys. And your stop is going to go 4 or 5 ticks beyond the window of opportunity, where the market shouldn't go. And at this point in the equation, you're in the market, the advantages are present, and there's nothing for you to do. You don't need to move your stop up and down. You're already in the market. Guys, you're either going to get stopped out for a loser, totally normal part of a positive equity curve. I want you to go ahead and embrace the idea that losers are okay if the rules were followed. I even made a picture for it this morning. My brother and I were being silly. I'll share with you the silly. I want you to be okay with the idea that if you followed your rules and you lose, it was a good death. Has everybody seen The Last Samurai? It was a good death because I had every advantage. It was just a cost of doing business. So become okay with not moving your stop. Become okay with every now and then it's just not going to work out. More often than not, the market's going to give you a reversal bar in the direction of your trade, meaning that that momentum is working, that that clear path is doing its thing, and that that bounce point inside of favorable large triggers was actually a bounce point. And if you get that reversal bar, you're going to be able to reduce your risk a couple ticks above it. And once again, you find yourself in a situation where there's nothing to do. You're either going to take a smaller loser, which is okay. I want you to be comfortable with it, or all those advantages are going to pay dividends and it's going to hit your first target. And if it does, it's only $100 in the distance. And guys, that's not a very big target. And remember that this is the simple plan for creating confidence. And this is the simple plan for making you comfortable with what you're doing and establishing trust. And that $100 makes you feel good. Ninja Trader tells you that you hit $100. You get confidence through the memory of success. Your sweaty palms dry up. Your heart stops beating so fast. And you're going to put your stop at break even. And guys, break even is a ridiculous stop. I'm going to tell you right now, it's just asinine if you know how to read indicators, but you're brand new. So let's keep it easy on you. Go break even, get paid and have no risk, guys. Um, because what's going to happen is your management plan will grow as you grow. But by going break even, by taking that money, what it does is it reminds you that the large chart is why you're in that trade in the first place. That the large chart said that you had odds favorable momentum. That the large chart told you that there was nothing to create a bounce. That's why you're in the trade, right? So what this does is it allows you to trust that large chart. You're developing trust that odds favorable momentum and a clear path is a recipe for success. And you're going to let it go to the second target or you're going to get stopped out break even. And if it goes to the second target, guys, the way this is set up on the KISS plan is that's just a $300 trade. That's it. That's all. That's not a lot of money, right? 300 is cool, but it doesn't feel like you're gonna be rich off of $300 unless you do $300 four or five times a day, and then it starts to add up, right? Small goals, baby. And I love to do this math in the room. $300, if that's the best that you do every day, let's say three of them that hit 100 and break even, that's still a $1,500 week, guys, or a $16,000 or $6,000 month, and that's a 72,000 year. And what happens when you go from two contracts to four contracts, and you incorporate that exact same process? Now you're at 144 and you do it again and you do it again. And instead of taking all the trades, you take the best trades, and the best trades are where results happen. Um, and that's what the KISS plan is designed to do, guys, to get you in where you have the highest chance of success and to manage it as you develop trust and the ability to read indicators. And then once again, when I put this down here, you will craft a plan for management tailored to your personal goals based on your experience reading the indicators. This is your stepping stone, guys, to get you where you want to be as a brand new user. You're halfway to the goal. Nice, Paul. Stay patient. You should have been up early. It was giving it away this morning. I was up 1,000 before class started. I won't even be trading anymore for the rest of the week. There was a lot going on early. So let me drop the KISS plan in there for you guys too. But that's it, guys. High probability trend trades. Get in at the best of the best spot, right? And it's going to open the door for medium probability trend trades. And once you open the door to medium probability trend trades, it's going to be your ability to manage that's going to help you find success with it. I'm going to give you as well this morning. This is a video watch list. So Abdul, this is great for you. I know you want to watch videos. There's that tops and bottoms video, another tops and bottoms video, another tops and bottoms video. This is all put together by my brother who's been teaching this for 27 years. Trigger line, tutorials, all of this is amazing because everything starts with trigger lines, guys. And then some on trend trades and 50/50s and strong trends. But this is a great watch for you guys that want to do a little video watching. Um, Support held like a boss, didn't it? Isn't that cool? And now we have the potential to break, but we're not guaranteed to break. So, are there any questions about the high probability trend trade? I know that if you're brand new, you probably have a million and you don't know how to form them, and that's okay. Let me show my favorite picture. Guys, this is your first couple days. That's me learning Nexgen. Taking a face full of water, all that information coming at me, and I have to learn how to break it down. I have to turn it into something. And I do that by breaking it into individual parts, and that's why we do what we do in this classroom. Direction plus momentum has me looking for terminations. Direction plus momentum plus a clear path has me looking for an entry. Let it be sequential, guys. Learn one thing before you try to get to the end, right? Don't try to become a professional trader if you're not cool with terminations yet. Um, be okay with the idea that you're brand new. It's all right to be new. New is a wonderful way to be. Focus on your entries for 30 days. And then, guys, we're about to get to the second part of the classroom. And this is where I start looking at the pictures that you guys have posted. This is where I go back to the questions that you posted in the room. We lay that foundation of what it is that we're looking for, the advantages. And then the second and third hour really revolve heavily around feedback, guys. This is your opportunity for a private session. All you have to do is drop a question in. All you have to do is drop a picture in. It's easier to have a conversation through pictures, and you can make the conversation effortless if you tell me why you did what you did. There are no wrong answers. Show me where you get in, show me where you get out, and tell me why you did. Help me know where your decision-making process is coming from. And what we'll do is we'll work together. We'll talk about the advantages. We'll look at the entries. We'll look at the exits, and we'll see what we can do. Um, and then, guys, I wanted to reissue my apology from the beginning of class in case you weren't here. Yesterday, I inadvertently called the demo a 10-day demo. There's a reason that I'm not in sales, guys, because I have no freaking idea what they're doing over there. I thought that it was 10 days. It turns out that it's a 7 calendar day demo. So if I confused anybody in this room with that, I apologize. Um, there's a reason that they don't even invite me to the meetings and tell me to teach people to read indicators because this is really where my talents lie. So there is how to annotate a chart. Pedro, you're probably annotating a chart right now. Um, and I'm going to take a break. I'll leave you guys with the NASDAQ. It's cranking. One of the things that I do is I try to take a break every hour, guys. I try to stand up. I try to stretch. I try to walk away from my screen and kind of recalibrate. And I've found, you may find too, that sitting in front of the screen for 3 hours straight is rarely advantageous. Especially if your rules haven't been met because you start to fabricate a little bit. It's okay to take a break, guys. And if you miss something, it's cool. It's like a bus. Another one's coming. I'll be back in about 5 minutes. When I come back, we're going to start clicking on pictures and we're going to start talking about them. We'll relay everything back to advantages. Nothing is off limits, guys. If you have a question, ask the question. The only thing that I won't talk about is politics and personal life. So, um, back in 5. All right, guys, here we go. Second hour. So what we're going to do is we're going to take your pictures. Um, and through your pictures, I'm going to revolve back to advantages. I'm not going to worry about right and wrong. I'm not going to worry about, oh, that's not a trade, that is a trade. It doesn't matter. The idea is that we're going to go back and we're going to talk about advantages. We're going to go back to those three advantages and see if we can just make you a little better. First picture posted today. Everything says up, quick little pullback. That's a big picture. That's an easy $300 with momentum and direction. Yay, that was my $300, so that felt pretty good. And then Alan is giving us a trade journey. And guys, let me see if I can make these smaller. There we go. So this is a pre-trade picture for high probability trend trade. Odds favorable momentum. It's coming from a good bottom. Notice that Alan's using the checklist. Everything says up, and he's defined the point where the market is most likely to continue. Alan, outstanding pre-trade. Notice that there's two charts, guys. That's it. And then Alan gives himself all the information. His rules are met. Entries in the right spot. Everything says go, right? High probability. Go, go, go. And then he goes back to two charts and takes the perfect entry. Odds favorable momentum. Tick or two above the midband. Do you see it, Dwight? And his stop is where the market shouldn't go. So far, it's textbook, Alan. And then the next picture, ooh, he starts thinking about other charts. When a reversal bar printed, small triggers on the 8 range breached the large. Also, where the price hit the areas, they were not inside the large triggers any longer. You took a graceful exit. All right. So it looks like, let's go two charts. Large chart set up. Large chart had a clear path. Perfect entry. Established risk. Could have made $100. And then, Alan, are you with me? And I don't know what it did after, but I want you to see something real quick. Small triggers crossed below large. That was your exit bar. And I think that this is kind of a big deal for management, right? Smaller entry chart. Odds favorable. Clear path. Everything is freaking amazing, right, Alan? Beautiful. Perfect entry. Stop is in place. And I know that you know all this, but I'm doing this for the whole class too. David, they don't show up in my terminations for crude oil. When I talk about termination conditions, it is fibs, divergence, highs and lows, and yellow one-to-ones. And Alan, this is one of those things, man, where your mid-band is still inside, really. And it's just moving up, and everything says up, and you're just, gosh, it's beautiful. And that's where fluctuations on a small chart confuse people a little bit. And then let me go back to your final picture. And it ultimately doesn't work, right? No need to take a loss on small trigger saying trade is going to struggle. I think you gave up the fight too much, too quick. It could have been $100 instead of 40. But I love that you went through this, and I love that you took so many pictures on one trade because 100 and break even works, right? Not every trade's going to work, but 100 and break even keeps you in. So, guys, this is how plans come to be. This is freaking amazing. And I want you to see what you did, Alan, as you went from 2 charts to 4 charts to 2 charts to 4 charts, right? Which is okay. Finding reasons to get out. And that's what I think you did there. Is you were looking for a reason to stay safe instead of embracing a reason when everything was right. And I'm telling you, there's got to be this mentality that happens where you trust the large chart so much, and this is for everybody, not just Alan, that you literally say, come and get me, right? Everything looks freaking amazing. Come and get me. I dare you. And you'll be okay with small losers. And I think that it was a great trade. Your entry is beautiful. And the longer it takes a trade to transpire, that was, 3, 4 minutes, the more you're going to have time to think about it and talk yourself out of stuff. Management's the second piece of the puzzle for sure. One of the reasons why keeping it so pragmatic is so important. Joel, no momentum, weak top. You take the short without momentum. Hey, Joel, can I ask you, what's going on with your trigger lines on this chart? What template are you using to have 3 triggers? What's this giant trigger? Because I think this giant trigger says don't go short, right? And you're sent their way up here. This is just one of those, let's see what happens trades. There's a lot of conflict on the chart. You're trading with direction. The smalls are down. Just a lot of conflict there. A little harder than it needed to be. And that's okay. It happens. And then rules not met. Thought you had to take the trade. You weren't prepared. You didn't have to. Yeah. And I think that that's a good way to think about it too. A lot of conflict, right? This one looks like it's going up and the smalls are breaking above and it looks pretty good. I can't see what was going on your entry here. Um, if that wasn't covered up, this might not have been a bad shot for a continuation. Um, but again, where are these triggers from? Where are these large triggers from? And how do they fit into your rules? Because I don't have these. You use the template. Um, you may want to right click and make sure that you're hit load and do the 13.2 Rinko 2023. You may have gotten one of John's like super weird, crazy, here's some extra stuff kind of template in there. Because I think those strong up create even more conflict. 23.3 large triggers. Yeah, I don't even know what a 23.3 is. Is 21.3? Is there a reason that you're using it? Because you want tick replay to help you with your areas. And you don't really need a 21 large trigger, right? Because you're not using it because here it set up and you went short. Is it possible that it's giving you one more thing to think about that maybe you don't need to? Just something to think about there. Too many minds. Today is Last Samurai Day. We're going to talk about all the Last Samurai stuff. Too many minds. If you're not sure what it's doing for you, it may not have a place on the chart. And then Alex. Odds favorable, clear path, perfect entry, didn't work. Alex, are you with me in here? That's the picture for this one. And I'll tell you what, when you trust your rules, you know that this one wins more than it loses. I love everything about this picture, Alex. I love the momentum. I love the direction. I love the clear path. Your entry is freaking amazing. It just didn't work. That's it. Great trade. Would you take that one again if it's set up the same way? I think most users in this class would. I know I would. I would take that loser all day long and not feel bad about it. Because if I take that same look 10 times, chances are I'm going to win 7 of them. And it's not hard to make money like that. Gino. Gino, you're killing me on these partial chart pictures. Same trade though, right? Lower divergence, odds favorable. Got lifted near area of confluence, snapped back on reversal from nowhere. You're sure you missed something. Gino, do you remember yesterday when I said life would be easier if I could see all of the information on the chart, on your small chart, to help you out with these? We're back in that situation real quick. And let me show you why I say that. Because dun, dun, dun. Odds favorable, good top. Okay, so I'm going to read through what you wrote. Odds favorable, good top. And it was at that point that you stopped talking about rules. Got lifted near area of confluence. I believe that means pull back to an area inside of favorable large triggers. But what's the one part of the equation that we left out? Trigger line, large triggers haven't broken. Large triggers haven't broken. Large triggers haven't broken. There's 3 areas that you're hoping break here, right? What happened? So down here on your smaller chart, was there divergence? Was there something going on that kind of spoiled the broth here? Does that make sense, Gino? I don't know. You may be trading right now. But guys, if you show me your whole entry, show me where you got in, right? Maybe there was something going on that told you that you shouldn't have taken this trade at 7:43 a.m. And one thing I can do is go back to the S&P at 7:43 a.m. and we'll see what it looked like. I believe that was your look. Almost there. It's 7:43. All right, so Gino, are you with me? I believe that was your entry. If not, this turns into a great lesson for everyone else, I suppose. That's it, 7:43. That was your entry. Let's see what the price was. I shouldn't have to work this hard. 83.75. So that means that you were in at the absolute perfect best of the best spot. Guys, give me a Y in the room. I'll give the lesson on this one if you're with me. Odds favorable. Coming from a termination creates a full reversal. Everything is beautiful. And this area has the potential to break. Gino took one of the most amazing entries that you could ever take on this one, right? Look at that. That's where he got in. That's beautiful. And look at the momentum. And then price went all the way to Fibonacci support to the tick. So from 84 to 78, that's 6 points, guys. That is $300 worth of profit. And you said that you're sure you're missing something. You're missing a fib. Would have been a great exit. 79.50 was your exit. So your target should have been hit at 79.50. Gino, was there a challenge? Am I missing something? From the looks of this, you took a very successful trade and a big winner. It's a great trade. I'm not sure what you're missing. I think it's beautiful. Everything about it. Does anyone else see anything wrong with it? I don't see anything wrong with it. Nice job, Gino. And guys, if you ever have to split before I check out your pictures, let me know. Go, hey Mark, I gotta go. And we'll look at your pictures before I leave. That's it. Odds favorable, clear path, good top, pull back to resistance inside of favorable large triggers. Easy peasy, Joel. Great read. You just had to get your head straight this morning. And it's funny, guys, sometimes there's this conflict between what we know we can do and what we're doing. We know what we're capable of and what we actually execute. And if you ever notice that you're going outside of your area, it's okay to back up a little bit. JW, weak top, odds favorable, 50-50. You missed the best one, right? That's okay. It still said everything was going down. You still had momentum. When we talk about that momentum leading the way, man, I like it. You take the entry at 80.25, so you're in just a tick or two below the mid band, and sure enough, it goes right to your target. And you move the first contract because you were nervous. JW, are you in here? Let's talk about nerves. I love talking about nerves because, guys, I've had them too. I still get them sometimes. Large chart leads the way. That is the best look ever, right? Oh my gosh, I could teach a class on momentum based on this trigger look alone. And this is a big thing. And then if we look at your smaller chart, synthetic or down, larger down, smaller down, right? Direction is down. Everything is down. There's a million arrows pointing to the downside. And you know, with all that momentum, JW, I know you know because I've watched you. You know that's where the market's going with that much momentum and all those advantages. And now you just have to learn to believe it. So much so that you say, come and get me, right? Your stop would have been amazing right there, tucked in behind a fib, all that happiness. Let it do its thing, guys. Let it marinate a little bit. And I don't know if you're on Sim, if you're on Apex, if this is your live money, but guys, you've got to develop trust, or management will be the hardest thing you ever do. If you are fearful and forget all the reasons that you get in because there's a couple fluctuations or a few dots on this line or on this chart, management's going to be difficult. And I know this to be true because after I was done blowing out an account and I started trading live again, my second time to go live, I would take 15 to 20 trades a day. And I would be up 12 to 13 ticks a day. So I'd be negative money. And it was very much because I was trading scared, because I didn't have the trust in there. I just lost a lot of money. I was scared to death. And I forgot why I was taking the trades that I was taking. And I was so focused on not losing that I forgot what was giving me the advantages to win. And I think it's pretty common. I don't think that that's an uncommon story at all. We forget that the large chart leads the way. And then Paul, Coming from a weak bottom, 50-50, smalls are through, large are not, divergence prints, and you just said, I don't need it. I don't need that look. I'm already giving up a clear path. Why would I give up momentum to? I like that one. And then you take a 50-50 with divergence. It's all about consistency, right, Paul? No way, not me. Just kidding. I'll take it. Ah, this one's a good bottom. I missed it. So, Paul, you just gave me a lesson. Thank you for that. Look at this, guys. Not a termination that creates a full reversal. Termination that creates a full reversal. Big difference when it comes from the decision-making point. Paul, I missed that. I apologize. One divergence doesn't worry him from a termination. One divergence terrifies him if it's coming from the middle of nowhere. Beautiful chart reads, Paul. Better than mine on your chart because I missed the good bottom. Yep. Outstanding trading. Nice job. And all that momentum carried it right to the fib, didn't it? That's always nice to see. All right, Pedro, let's see what you got, my friend. On long move, large triggers always catch up to smalls and price bars. This limit order was placed after both triggers broke resistance to catch the pullback to support, but was lower than the large triggers. So if we want our entries to be inside of large triggers, does that mean there are no viable entries according to the checklist rules on the whole second half of this long move? Pedro, I love that question. I really do. And you know what the answer is yes. There were no checklist-based entries, which means that everybody got paid but you, right? And that's frustrating. Why do they get to make money when I'm not? Why are they taking entries when they're not? Pedro, there wasn't a rules-based entry. There wasn't a statistical advantage present. There wasn't something going on that gave you a pattern that you have proven to win more than it loses. And unfortunately, it means that there wasn't an opportunity in that move. Was there an opportunity to get in a little lower? Maybe. Um, maybe an opportunity for a momentum style entry as you grow with the software, but sometimes, and I can tell you that this happened to me this morning, my brother was in a move. And let me show you guys. And Pedro, maybe this will make you feel better. Maybe it won't. I don't know. I'm going to scroll back on the NASDAQ. But my brother, we were up early this morning. That's all the news. All right, here we go. So my brother got short somewhere around here. I don't know, somewhere in this area. And I had to sit there and talk to him via Skype while he was meeting and exceeding his goals, right? No, Pedro, you don't, because the challenge is, and I think that was the one, it may have been an earlier move. The challenge is if you start looking for reasons to take a trade when your rules aren't met, you're going to find them, right? And the market flow chart isn't a magical chart. Um, the market flow chart, let me show you one of my favorite things on the market flow and volume analysis is it's a confirmation chart. And Abdul, I got your question in just a second. It's a confirmation chart when the rules are met, when the rules are placed. If you're using that 8 range chart, just a basic 8 range chart, what it does is it creates this opportunity for you to take an iffy trade and get a little bit of confirmation. But it's not going to get you into trades that don't fit rules. And that's the first thing that we say when the rules are true, when the rules are true, when the rules are true. Because market flow charts will absolutely get you into problematic situations if you try to do it just right there. I can tell you that there is something that John Novak teaches in his private classroom, the one that he's been working on and people in there. There may have been an opportunity in the middle using another chart. Um, but Pedro, sometimes we just have to accept that it's not our money. And I had to do it this morning. I had to watch my brother make, I don't know what he made. He made like $1,500 on a two lot on NASDAQ. And I never got a rules-based entry because I woke up 5 minutes after him and I opened my charts 5 minutes after him. And I talked to him the whole way down as he took this trade. He literally was posting a play-by-play as he took this trade, and there was nothing for me to do. The only thing that I could do is just sit there and hope to take the lessons out of it. Yeah, no, your thinking was spot on, man. It really was. And I'm going to show you just the picture. That was my brother's trade all the way down. And it never gave me an entry. I never got my rules met on the way down. And he took 40 points on the NASDAQ per contract. And it's just, arg, it's frustrating sometimes. It really is. But I think the fact that you didn't just jump in, Pedro, is outstanding. The fact that you didn't just jump in and hope is outstanding. And there may be a time down the road where you figure out a way to take a chunk in the middle of that. But for now, if you're on the checklist, you did outstanding work and should be commended for your ability to resist and to stay true to your rules because that's hard to do sometimes. And then hypoxic, can you do me a favor, brother? There's so much information missing here. Um, did you correct it on this one? You had odds favorable momentum, right? And you had a clear path, and you took a nice entry, and it ran you over. This divergence hypoxic doesn't scare me. If my rules are met on the large chart, one divergence doesn't scare me. In fact, I'm typically very thankful for that one divergence because it pushes me back to my best interest. When my large chart is rock star solid, when my large chart is telling me I have odds favorable momentum and there's nothing in the way, the only thing on a small chart that will ever deter me or pull me out of a trade is three divergences in the same price range. One divergence, amazing, probably going to get you back to your best entry. Two divergences, you get your feelers up. You're like, all right, let's wait and see what happens. Three divergences says jump ship. Three divergences may terminate a trend. So if the rules are met on the large chart, I love everything about your entry. I love everything about the area inside of favorable large triggers. I think that this is a trade that with this look wins more than it loses. And this is one of your costs of doing business. Some jerk face in crude oil wanted to push it just a little bit lower. They didn't realize that you were following rules. Does that make sense? And I know that I did it too. Any trade that I lose, I start looking for little micro reasons. Well, what caused it? Maybe because that fluctuation right there didn't follow through and hit the bottom of that trigger. Maybe that became a loser. Maybe this one divergence on a small chart is the reason. And the reality is just some jerk with a lot of money wanted to go back to the midband. That's it. Beautiful trade. I could teach a class on your execution of that trade. You did it beautifully. The only thing is you could have taken a little smaller loser, 4 or 5 ticks below that lowest point of support, but other than that, outstanding, dude. You did everything right. And thanks for the correction on that one. That makes it easy. All right, RJ. Odds favorable momentum. Yes, sir. Red background. I dig it. Room to the termination and two areas of Fibonacci resistance. You pulled back to the mid-band, confluence, red background. Gosh, RJ, day 4, you are just... Do you have experience trading? I'm assuming you do. There's some key concepts here that you really seem to grasp. I love that you... So when you hit the mid-band, I'm going to talk through the whole thing just for everybody. This is a great educational picture. When you hit the mid-band, the large triggers were a full bar away. And this is the gap theory as I teach it. And what the gap theory says that if you accelerate away from these large triggers and run into something, FID, midband, anything, price is likely to snap back. And what it does is it buys you patience and it keeps you from, gosh, you did this so well. It keeps you from trying that short because the large triggers are so far away. And then you start looking at the correction to the large triggers, which happens to be with resistance, right? And you recognize that, but you didn't want to fight. You said, well, I'm not going to fight it. Everything's green and going up, and I don't really have areas and they're not favorable. So you let it all come back to agree, and you take that momentum that it's already checked up off of it. The momentum is great. You let everything agree, and that little snapback to the midband is brilliant to get you back to fibs. And I'm not even sure you've ever seen this picture. But when the large chart leads the way and the midband or like the trend trade doesn't quite work out, letting everything recalculate and go the right direction creates a huge advantage. And you see it a couple times here, and you pulled that off beautifully. Um, Absolutely beautifully. And the gap theory, I think, is what set that up because the gap theory shows you what the reaction is going to be. And once it pulls back and closes that gap, this is where the decisions are getting made. That's a lot of arrows. Sorry, let me clear that up. Once it pulls back and closes the gap to the triggers, this is where decisions are made. And you said it's not clear cut, and your patience to wait for that, outstanding. Beautiful chart read, great execution. And then I love that you hop out right at Fibonacci support because you just don't know if it's going to hold or break. Nice job. Welcome to Nexgen. Whatever you've been doing is really good, and I hope that this is helping. I hope that this maybe gives you a couple extra areas and a little bit of advantage. That's what I find a lot of people with experience get from Nexgen is not necessarily a brand new methodology, but an outstanding way to complement whatever they're doing. All right, D-Rock. You know I don't need to see that. 50-50 from a good top, one divergence. You wait for market flow confirmation, it looks like. You did. Now you're okay. And then what got you out high tick? Second divergence, according to the rules on the 50-50? I got you. So one of the things that you're going to find, D-Rock, and I'm not trying to adjust your plan for you at all because I like your plan and I think it's a good plan. But if you are going to pay this much for confirmation, things like this are going to mess you up, right? Second divergence, second higher divergence is always going to result. There's no way to manage out of it in time. Your second divergence was true about right here. So we might have been able to save, oh, I don't know, 3 or 4 ticks. So when you've got a good top that creates a full reversal that has odds favorable and it's only one area, for me, that's an in at the area, especially when it's this well defined. That's an in at the area moment because it gives me the opportunity to manage it. And look at how far away and below the triggers your small triggers are, you have odds favorable momentum on both charts. You have a good top on your large chart. Let me see if I can slide over. You have odds favorable momentum on your range chart, and you have a high volume area supporting all of that down. And you're going to begin to recognize that when you have all those advantages and you have that high volume area and you have that strongest trigger look, you're going to turn yourself into a get in at the area kind of trader. And then I think two divergences is an outstanding exit. But you just don't leave yourself any management room with the confirmation. And it's you almost have to make a choice, one or the other. Am I going to wait for the confirmation, or am I going to take it at the area because I have so much right with the trade? I'd rather take 4 ticks losing than pay 7 ticks for entry. Does that make sense? It's kind of you're weighing out cost of doing business there. I love the trade. Cool. That's a go at the area moment for me. Um, and then this one, let's bump it up. We'll do large chart first. And I know you're learning market range chart, so we'll talk about it. You have odds favorable. Everything says go. You are a couple ticks below the area. You take your first profit. And you left your second contract where price shouldn't go instead of 2 ticks above pivot because it's still high probability trend trade. And I don't disagree with that at all, D-Rock. I think that's very logical. And then let's see if there was any information over here. So the only thing that I can say on this one, D-Rock, is I like it. It happens. It does happen and it's normal. So you're using market flow well. One of the things that tends to happen, and this is a market flow lesson for you guys, is when you're at a or in an outer band. There's the market flow works with these outer bands. When you're at an outer band and you get something like a reversal bar, and then you're at the outer band and you get something like this antenna bar, right? What happens is the market tends to push up a little higher. It's just exhausted here. It's at the outer limits of where it's at. And it doesn't always happen. Haji, you can build one if you want, without a doubt. And then there's market flow indicators. Talk to whoever you're working with. They'll get you squared away on everything that you need for it. But D-Rock, I don't know that there's anything that I would have done any different, to be honest with you. It's a great trade. You had every advantage and very logical. And the fact that you got paid on the first one is outstanding. Joel didn't quite make it. And I think that's probably the same trade, right? Didn't quite make that mid band. Comes down. You get out for a couple ticks. Not bad. Your entry is at 94.25. So your entry is all the way down here. So when it didn't hit your area, and this is pretty normal, guys, when it doesn't hit your area and it starts to go down, you're going to want to jump in. Eventually, it made it to that area. And I'm not sure what it did after. We've all done that one, right? Where you hope it gets you, and when it doesn't, you jump in. And then sure enough, it comes right back to the area right there at the triggers. It's a part of it. Little patience, right? Hypoxic. We talked about that one. Let me see where I'm at here. Tony the Tiger. Newer users, there's a lot going on. There's a lot of information going on here. There really is. And I know that it can be a little stressful for the brand new user. All right, Tony, NASDAQ. Your large chart is 50-50-ish off the area. I'm not sure where you, oh, you got in here. So clear path. Not odds favorable momentum, a little weak. You get in on the way up. You're on the wrong side of everything for the entry, so you're hoping the fib holds based on the laws of termination. And sure enough, it did. Nice job. And then that was your exit, right at fibs. So before and after, I want to go to the fibs, and I'm on my way to the fibs. Is that the same one? That's the same one. Little meat on the bone there. And then bad bottom. Late entry for a momentum trade. You got stopped out. Reversal bar lets you know that the momentum is no longer present. Then it pulls back, goes up, pulls back. You get in with the momentum somewhere right around here and carry it up to the midband. I like it. I think your momentum trade was, yeah, I think it was just too late to be able to manage. And it didn't break and pull back. It just was in the process of breaking. And I'm looking to see if there was a better opportunity for it. And I don't really see one. I think yellow one-to-ones are typically a better opportunity, but you didn't really have a lot of momentum just yet. Yeah. Great recovery, though, when everything rolls and you come back in. And it looks like it lines up right there, 29, the right side of everything. Nice job, Tony. And then Joel, this is yours. That's it. That one didn't work. You chose not to take it because it was falling on the wrong side of the large triggers. I like it. That's it. You followed your lessons. You followed your rules, right? So Joel, do you know what I see? And I love that you asked me that and that you have the courage to ask that in front of all these people. Do you know what I see, Joel? Is when you follow your plan, you're successful. And when you deviate from your plan, you take losers that frustrate the hell out of you. So you're just like every one of us. If you're going to take a loser, let it be a good loser. Let it be a rules-based loser. That's it. And there's no magic recipe to always following your rules, guys. There's not. Some days are better than others. Some days I come out and the third cup of coffee makes me crazy and I chase everything and I have to stop myself and go, holy shit, what am I doing? And some days everything flows. And it's great. And you couldn't force me to break my rules, guys. And I never know what day it's going to be. But I know that it's always an option. I know that it's always an option that I'm going to do something silly, right? Because I'm human. And then once I recognize that I did something silly, I got to put myself in timeout. I got to say, whoa, you messed that one up. Paul, 50-50, huge window of opportunity. So you're like, yeah, no. This is brilliant, Paul. And let me tell you why. You already know why. Because, guys, if you're hoping that an area breaks, do you want to put $300, $320 of risk on hoping that an area breaks? That's a lot of risk for a maybe trade, isn't it? Paul, I think these are the ones that we get suckered into because we want to be into a trade, and I think you did an outstanding job. You fell for it, Jose. And then Joel, I just hit that one. That was a good one. Um, Yeah, and let me show my thinking on 50-50s for you guys that haven't been around that long, and we'll do a short one. Um, when the rules are met, and Jose, you know that it was a great look on the large chart, right? Of course you do, because it was odds favorable momentum, and it had the potential to break, and it was good, and it was great, yeah. And then, so for me, if this becomes a maybe trade, if the path isn't clear, if I don't have nothing between me and my target, then that's where you start going through those factors. And I love the phrase, my money is worth the perfect entry, right? My money is worth no divergence, no loss of momentum on that smaller, faster chart. And my money is worth strong triggers on the smaller chart, reaffirming that momentum. And my money is worth, and this is the biggest one for me, I think, on a 50-50 trade. My money is worth the least amount of risk possible. And there's going to be a point where I'm not willing to pay full price for a maybe trade. I may say this look is worth $75, $80 a contract because of the momentum, the clear path coming from a good top. And then, the flip side is I may say, I'm not willing to put the risk on the trade, hoping that four areas break. And that's something that you have to work through. And it goes back to whether or not you're feeling jumpy is going to have a lot to do with it. Whether or not you're feeling very calm and okay with not being in a trade, or whether you are feeling very antsy and you really feel like you need to be in a trade. A lot of times that'll determine. Um, all right, Pedro, let's look at this one. I like the look. So right here, odds favorable momentum, 50-50, good bottom, strong triggers. You're in right at the top of the window, small above large. Didn't work out. No, you didn't miss a red flag at all, Pedro. Um, Not even a little bit, right? And Pedro, this is what I do. And I'm assuming that you have this. You may not. Let me open up my KISS plan. And I want you to guys to see, this is for my new users, and you may or may not do this. Um, this is like the most basic approach, right, to what we're doing here on that 50-50 trade. So let me open up yours again and snap a picture of it. Because Pedro, I'm not going to lie. This is one of those when you talk about a good loser. Dude, this is a good loser. And watch this. If we put this on it, let's go through it together. Guys, your checklist will also make you feel good about these. Did you have odds favorable momentum? Yes. Smalls outside of the large? Yeah. No divergence on the 5-1? Absolutely. From a good bottom? For sure. Enter the area. That's all you can do. You entered at the top of the window of opportunity, Pedro, and I think that that's great. And on any pullback, it could just keep going. But let's talk about one more thing. And I'm going to tell you guys right now, I don't have a number for it, so please don't ask. A high probability trend trade, Pedro, with a clear path there instead of a fib, that's, whoops, that's your number, right? I want to see it win 7 out of 10. Does that make sense? Does everybody get that? If this fib isn't here, that's a 70 to 80%er at best winner. That is 7 out of 10 working. I don't know what the number is when you throw a fib that hasn't broken in the way, but what I do know without question is that 33.3% of the equation to get me to a 70% winner is gone, which means that it's not realistic to expect, I would say, more than half of these to work. Does that make sense? So if you've incorporated 50-50s into your trading plan, Pedro, you took the best look, the as many advantages as you can have on a 50-50 look. And I love it. And I would have taken the exact same trade and not felt bad about it. Um, but I think realistic expectations on your win percentage with these, right? When I'm incorporating 50/50s and high probability trend trades, my win percentage is in the low 60s, high 50s typically. And the idea is that I can manage my risk. Pedro, it's outstanding. And I wouldn't be frustrated with it at all. I think it's great. Does that help a little bit? Um, you did everything right. Jose, bad top and divergence. Beautiful entry. Second divergence from a bad top says get the hell out. And because you paid for confirmation, you didn't have as much room to manage, right? No, Pedro, you're doing awesome, dude. You really are. Arbitrary number, D-Rock. Because the 5-1 is a fluctuation chart, just trying to give myself a little bit of room. That's it. My brother probably told me 2 ticks years ago. Jose, I love it. The only challenge with this one is the bad top, right? You can do whatever you want, brother. It's your trading. You could do no ticks. Doesn't matter. I just try to give it a little breathing room. That's just it. D-Rock, if $10 is a deciding factor in your trading, you got to work through a couple things. The video stopped. Did you guys lose me? Hold on. All right. Did this come back? I just rebooted it. Did it come back for you guys? Oh, it's giving me the whirly on mine. Audio's okay? No audio? Can you guys hear me? Do we have audio now? All right, guys. Can you hear me? I just came back. It's still spinning. All right, guys. Did we get anything here? I'm talking, but it's not happening. I'm talking. No. All right, give me a minute. Hmm. All right, guys, try it again. Can you hear me? Are we in? Are we good? Anybody? All right, guys. How we doing? Anybody? Woohoo! Sorry about that, y'all. We'll wait for people to come back in. I had to go through, do the whole task manager, and kill everything Discord in the background. So hopefully people show back up and nobody gets frustrated. Sorry about that, y'all. Sorry I threw the F word out there. Didn't mean to say fudge in front of everybody. So we'll give it just a minute. Um, and then did Jose D make it back in? Not yet. Guys, 50-50 from a weak top. Those are the hardest 50-50s to win, especially when divergence prints. But that was such good management. And then D-Rock, do you see how confirmation makes it harder to manage? Yours may have been actually the same. Hypoxic, I have it in my head that you're a silverback gorilla just because of your avatar. I thought I should share that with you. You ever do that? You look at people's avatars and you're just like, or their pictures, and you're like, okay. I think confirmation is great, D-Rock, and I think that it's appropriate. Understanding when it's appropriate, right? It was appropriate here. It was very appropriate to wait for confirmation because he wasn't from a good top, if that makes sense. Especially when you throw divergence into the mix. It becomes even more appropriate, looking for some level of confirmation. Um, Unfortunately, that's just a reversal bar, though. That's not really what we're looking for confirmation. What is confirmation bars? So while people shuffle back into the room, when you're looking for that market flow confirmation, there's some pretty specific ones, right? The arrows, the antenna bars, not just a reversal bar. And when we talk about an antenna bar, and I think this confuses people sometimes, that's an antenna bar with a tiny little top on it, right? The body was huge on that one, and I guess it was. That's a yellow signal. That's an antenna bar. Like, that's a good looking antenna bar. When you've got that tiny little bit, right? And then you're looking for those buyers or sellers maybe at the top. It was an antenna bar. It was like at the, yeah, smaller body the better. It should look like that 1970s TV antenna. So guys, 50-50s are great trades. There's a way to take them with the highest chance of success, and there's a way to take them that are a little more iffy. Whoops. And then I prefer the higher. And then here's the same one, bad top. There's a no, right? If 50-50, no divergence, enter at the area with a limit order. If 50-50 with divergence, no trade. I like it. And then Alan, you chose to not put good top or bottom into your 50-50 plan. Um, and that's totally cool. That's your right. But I noticed that you mentioned it, and that's pretty cool. 50-50 with divergence from a bad top, no thanks. Alan, great job. I don't even know if you're in here. Are you in here? Yeah, you are. Nice work. I noticed that it's not on your checklist, but I like that you're thinking about. Oh, yeah, you are. Okay, there it is. But on your 50-50, I see what you've done there. Since that's a no, I like it. I like where your head was at. And at the risk of being super nitpicky, when you go to your 50-50, I'd make that a condition, right? It's hard to share a checklist for a high probability trend trade and a medium probability trend trade. And you know what you're doing, but you know where you're at, right? You know what you're looking for. So your plan is your plan, and I think that that's a big deal. But I noticed for myself anyway, is that this is one trade, right? And this trade requires this management. And then this is a completely separate entity, completely separate trade, and therefore has a completely different management. So for me, the separation, it helps me a lot. So if I'm taking the high probability trend trade and everything is cranking, I don't want to use a 50-50 management on it and get out because of a divergence, right? Does that make sense, Alan? Sometimes I feel like I'm being nitpicky, and if it ever seems that way, it's because I'm sharing with you the things that have helped me in my journey. And then same trade, right? Bad top, 50-50. You get in, higher divergence takes you out. So everybody took the 50-50, and we all took it different ways, and only one person so far skipped it. Bad top, 50-50, divergence, doesn't work. And Joel, you took the same one? Small loser, right? To possibly get it. Did anyone else notice that your window of opportunity extended from 27 up to 37? Did, did anyone take that into account? That your minimum risk on this trade on a two lot was almost $300? Oh, thanks, Joel. You have a good one too. 16 ticks. And whose picture was this? This was David W. David W., did that come into account for you at all? $320 of risk on a maybe trade from a bad top? Yes, now. I do that too. I'm like, yeah, now it does. Cav, on the 13.2 NASDAQ, the synthetic trigger is above the large from the 34.5. Does it matter for an entry? Cav, the synthetic trigger on your 13 is the large from the 34.5. Can you give me a picture instead of trying to make me imagine? Because I can't picture what you're talking about. If you'll snap a picture of your chart, that would help. We can go to the NASDAQ, but I'm not going to tell you if you're in the right trade or not. I don't know which direction you're going, so I don't think I can even offer my opinion on the synthetic here. We can talk about it after if you want. And then Joel, I think you took the same one. Whoop, education room. Oh, you were just letting me know that I was gone. And then Ron, don't think, feel. And then D-Rock, you posted something earlier that I didn't read. I read it to myself, but I wish I would have read it out loud, so I'm going to read it out loud now. You're at the point where you're starting to have too many stipulations and things in your plan, and you were making more money when you just kept everything simple. And I wanted to thank you for putting that in there. I wanted to thank you for putting that in there because this is the normal progression, guys. This is the normal progression for everybody. It was a lot easier, wasn't it? It is the human brain's desire to complicate things. The human, if you want to see it in real life, get in a fight with your wife and have her text you that she likes your shirt and see how you react. Have her say something nice to you and see how you react. Or vice versa. If you're arguing with your spouse and you're like, oh man, I'm being a jerk, I'm going to send her something and tell her that she looked pretty this morning. She's going to overthink it. What do you mean I look pretty? I look pretty now. I didn't look pretty then. What does that mean? What's he trying to say? I don't get it. Well, no, it's just it. You just look pretty. And just too many minds. Guys, the more we cloud it up, the more we talk about, I love that I'm leaving Bruce Lee up here. The harder that we make it, the more opportunity for problems, right? So Cav's question was on the if the 13.2 synthetic trigger is above the large from the 34.5. If the synthetic is above the large from the 13, it doesn't make a difference. These two triggers work together. These two triggers work together. They are very much a symbiotic relationship between the two. And really what you had here was what had the potential to be odds favorable momentum. You really did. You had the potential for it to be odds favorable momentum. And you did have a clear path, but it just wasn't, yeah, it just wasn't there yet. So if you got in at the mid band, this is still a lower end, right? But Cav, look at the small triggers fighting against you. And look how they acted as resistance right there. This is, for me, is one of the biggest loser reducers on the NASDAQ. The difference between fighting these triggers and not fighting these triggers is huge. And the cool thing is that when everything says up and these come down strong, the most conservative entry is a close on the correct side of the small triggers. And even this one didn't work, but your risk is established. You can get in, you can be a little bit aggressive. And I'm not sure if you've looked at the yellow section on the spreadsheet that I put together on the NASDAQ. And that was the whole thing. I blew out 8 or 9 Apex accounts, Cav, fighting the small triggers on my entries and just getting absolutely run over every time they did that. And I did it so many times that I went through the same process that I suggest you guys embrace. As I started going through all of my pictures and going, man, what keeps killing me? What keeps killing me? And by doing that, I created this whole section in my spreadsheet called NASDAQery. And the most common picture is that the small triggers win. The most reoccurring theme in here is that the small triggers win when they're less than a bar away. So Cav, maybe you can take that into next week. Go look at all of your trades on the NASDAQ that get run over like this and see what the common thread was and see if you fought those small triggers. So if this were my area for entry and it's not coming back, at the time of the reversal bar, I'm gauging where those triggers are. Hopefully that'll be helpful. Hopefully that'll be helpful. But guys, we all try to make it difficult. And look at that. They pushed right down to Fibonacci support and not a trigger line broke. And notice how it stalled out. New users, do I have some new folks in here? Give me a Y if you see how price just hit the brakes. It may break. But look at that, to the freaking tick. You know where that's at. Cav, I think you had the right idea on your trade, and I don't think that the synthetics had anything to do with it. Absolutely, D-Rock. 51% you can. I know traders that win 30 or 40% of their trades, but because they manage them properly, they're positive almost every day. And I've had 80% wins where I've lost money because I refused to let the trades do what they were supposed to do. Um, so you just have to find your happy spot, right? And D-Rock, I say it every day. And maybe you're at this point. Maybe you're at this point where when you try to make everything harder than it needs to be, commit 5 days. Just 5 days. That's all I ask. Guys, I'll never tell you that you have to stick to this plan forever. But this is one of the best ways to take a big, deep breath, get your poop in a group, and focus on what's important. Um, and D-Rock, you started about the same time. Chef funded multiple Apex accounts with the KISS plan. Snorri funded multiple Apex accounts within their first 30 days with Nexgen with this very simple plan. And then what happens is when we start making that money, and D-Rock, correct me if I'm wrong, is we start feeling smart. And if 4 reasons to enter a trade is good, well, then 8 reasons has got to be better, right? And guys, the way my brain works, 2 charts tells me everything I need. Don't go short into support, right? But if I add an even higher time frame, you know what I do? Is I go, oh, I know that this is a termination and my rules aren't met, but this other chart says that I should take a shot. I know that this isn't a good trade, but this range chart had a reversal bar on it, right? Beautiful. Cav, that's what we call the apology. When that one doesn't work, you take the perfect momentum. Break, snap, down, go. Snap, up, down, go. That's how you trade the NASDAQ. Beautiful. And everything says down. And everything has momentum. And your path is clear. And all you have to do is take an alternative entry to capitalize on it. And look at that exit. I'm not going to lie. This is my favorite part. Cav, I love the way you took this trade. And I love that you didn't sit and stew about the loss at the top. Look at that freaking exit, guys. Cav knew where the market was going. It happens. Did you follow the rules on all 3? That's what I always look for. And it's frustrating when you lose 3 in a row. And guys, it will shake you. 3 losses in a row will shake you. I don't care who you are. It'll make you second guess everything. Yeah. But the thing is, though, Cav, and I know because I'm like an elephant, I never forget. There's no doubt in my mind that you've shown me 70% winners on high probability trend trades, right? There's no doubt in my mind that you win more than you lose on that look. God, you just found all 3 at once. And one thing too is, guys, if you're watching 3 markets, right, then it's 70% on 3 different markets, which means that out of 30 trades, you're going to lose 9 of them. And doesn't it suck? I lost my 20% on crude, and I lost my 20% on this one, and I lost my 20% on that one. And you're like, son of a gun. So, um, you're in your Apex qualification. It's okay because you're going to have a funded account and you're going to have days like that. The fact that you stood up and left the house is outstanding. That's so smart. Cool off for a minute. And then you came back and you got it all back. Nice job. And then Cav, dude, we can fix your NASDAQ. Don't fight the triggers. I'm telling you. Go back and look at your 2 losses on the NASDAQ and look at the small triggers coming into your trades. Look at the small triggers coming into your trades. Look at Bruce Lee staring you in the eye. You'll find that that's a very real thing. You'll find that it's a very real thing. is fighting those small triggers on the NASDAQ. Be like water. Look at that termination condition. Isn't that beautiful? Let's go see if we can find one. Cav at 1134. No, D-Rock, it's not the same on the S&P. Because remember that your small chart on the NASDAQ is your large chart on the S&P. So if your large trigger, if your large chart small triggers were screaming up at you like this, D-Rock, this is your large chart. Are you going short against that? And Cab, this is for you too. Hey, JW, enjoy your weekend. Thank you. And then I think that this is the mentality switch that you have to make with the NASDAQ. Um, Cav, if you were on crude oil, you probably wouldn't fight those triggers, right? So NASDAQ's kind of the same thing. You're thinking down, it says down, you want to go down, but this is a 13.2. This isn't a 5.1. It's a little bit bigger. So it's going to take just a little bit to slow that immediate momentum. And that's where these entries just really pay dividends. So let's look at the 50-50 right here. At 1126. Cav, do you see it? Look at the small triggers on the first bounce. Look at the small triggers when that 50-50 comes back to the area. Does that make sense? And then Tony, be like water. Tony, I know you're working on this one as well. When you go back and study it a little bit, you're like, holy crap, I can get rid of half of my losers. And it's really pretty outstanding. So the spreadsheet taught me this. It was pretty cool. The spreadsheet taught me that. The spreadsheet taught me to go. And then look at those large triggers a full bar away. Absolutely, Kath. Thank you for posting the way you do. And then Jose to P, I think you were gone when we talked about yours. Man, that was a good look. It was a little iffy on that 50-50 trade. The bad top and the divergence, it's a bad couple, right? Absolutely, man. Let me drop it in the room for you. There you go. You can just download it right from the room. And then Abdul, because we're kind of getting there. Man, I appreciate that, D-Rock. I try to bring it back to basics. Do you see how price reached the area and absolutely none of the triggers broke? Dude, this is what we're talking about. Do you see it? If you don't have the visual. That's that termination condition. This is the advantage that you have. You know exactly where the bottom has the potential to be. And then Cav, because he loves to take care of me, look at his exit from his short trades. He's able to use that fib, those triggers above, and really squeeze the absolute most out of his short trade because he knows where the market's going. Because he's done his study, right? And it did it here on the S&P as well. Holy smokes. Right off Fibonacci support. I love it when that happens. Oh, and then one more just for a reminder. Right off of Fibonacci support. And you won't see it on day one, probably. But you may see it on day 2 or 3. I don't know. Cav took a break from us. Guys, stuff like that, I'll let him answer. Yeah, I don't know. I try not to put other people's business out there. I mean, we'll talk about what's presented in the classroom. I'm not sure what his timeline is. I know that I have people in this classroom, Abdul, that have been with me for 3 days and people that have been with me for 5 years. And there's always something to learn. And I always learn something. I agree. Cab, I agree 100%. Not that it's important because it's me, and that would be a little narcissistic, right? Guys, this is my classroom. Every morning for 2 hours before I come to see you guys, this is my classroom. John Novak and I start Skyping at 5 a.m. Central, 5:30 Central. We talk about every pattern. We talk about management. We talk about opportunity. We talk about when the opportunity isn't present. We talk about rules that we break. We talk about rules that we enforce. We talk about ways to make things better for you guys. I use the coaching the same way you guys use the coaching. I use a mentor the same way you guys use me. And I'm so thankful to be able to come back and give you guys what I get from him because I think everybody improves from it. Always being in that learning point. Um, and you'll break away and you'll go do your own thing and you'll mute me, right? Like my goal is that you just are so comfortable that you fire me. But until you're that comfortable, hang out. I love having you guys here. And it is a journey. It's definitely a journey. And it's a lot of fun. Thanks, Cav. I do appreciate it. You guys are all important to. If you knew me outside of here, you would realize that I'm about the most annoyingly optimistic guy that you're ever going to meet. I look for the silver lining in everything. I'm a big fan of lifting people up, and this classroom's no different. I just have the amazing opportunity to lift up 30 to 50 people every day instead of just some stranger on the street. So I feel very fortunate to do what I do. And I'm very thankful to be here. So, with all that mushy stuff said, guys, is there anything else you'd like to cover before we call it a week? It's been an outstanding week. A lot of great lessons. Next Gen Ben from Colorado. We all know Next Gen Ben. You know, Next Gen Ben was one of those ones, and Abdul, if you're friends with him, he'll tell you stick to a plan, keep it simple. He'll tell you. He used to come in here and say it all the time to this classroom. Guys, just pick one trade, pick two trades, keep it simple. There's so much money to be made. Mike's a good one too. Mike used to trade 100 lots. And it used to floor people because they'd see his P&L and he'd be up $37,000 in a trade. And it was the same trade, just old men. That's the goal is to get there. I already got there. And I'll tell you what, youth is wasted on the young. They don't know how to handle it. So, guys, we're going to call it a day. I apologize for the technical glitches in the middle.